We're here at the Black Diamond Conference presented by Money Map Press. We are here in Delray Beach, Florida, and I'm joined by Rick Rule. Rick, great to have you here.
Remy, always a pleasure. Thank you.
Well, you are known for your mining investments, and you're here presenting in front of the audience. So can you tell me what you expect to see for the economic outlook in 2018?
My gut feeling, it's always a safe bet to say more of the same. What I see in the economy is not an awful lot of demand growth. That isn't a real good global synchronized recovery. But coming up off a fairly low bottom, the United States has responded, I think, fairly well, simply because it had fallen so far. I think some credit probably has to be given, grudgingly, to the reduction in regulation coming from Washington. And I think the tax cuts are going to have an advantage in that they add a lot of liquidity to an already liquid economy. So my gut feeling is that 2018 feels pretty good to most Americans.
And of course, Rick, you're known for your investments in the natural resources space. Given what we're seeing so far this year in January, what do you expect to see in natural resources?
Well, a strong economy is always good for resources. You have to use the stuff. But the truth is that the driver in natural resources has not been demand growth. It has been supply decline. We had 5 years of very, very poor pricing in natural resources. Pricing that was so poor that we sold goods for less than what it took to produce them. The consequence of that is that productive capacity fell. And as a consequence of productive capacity falling, prices have risen. One example would be the oil price. The price got as low as $40 a barrel. The estimates are that worldwide it takes $60 a barrel to make oil. When you lose $20 a barrel 100 million times a day, the outcome becomes harsh. The market is now corrected up to 65. Not a strong economy, rather markets working, and that's what we see in resources.
And of course, I want to move on to the mining space. So what are you seeing there right now?
Mining space is healthy. The gold price has reacted reasonably, even in the face of high liquidity and a relatively strong U.S. dollar. Other commodities are reacting to the same type of impacts that we talked about with regards to oil. That is 5 years of underinvestment, and so capacity constraints. As the world economy begins to pick up from the lethargy started in 2008, and as demands for mineral commodities pick up, the pricing firms and the industry comes into a recovery cycle. My suspicion is that we are in the early innings of a very broad and very long recovery cycle in mining.
And Rick, I'm sure many in the viewing audience want to know what Sprott Holdings is up to in terms of investments this year. So what kind of insight can you give us?
Well, I'd say that we've accomplished two very important goals as a company. The first was that we sold our Canadian General Securities mutual fund business. Great business, but it didn't fit with us. And we added to our suite of exchange-traded precious metals products by taking over the Central Fund of Canada, and we welcome those 90,000 shareholders into the Sprott family. We now manage well in excess of $8 billion in exchange-traded precious metals products and are, in fact, the largest and best sponsor of those products for investors around the world. And we look forward to bringing new investment products both to institutional and retail investors worldwide.
Okay, Rick, well, thank you so much. I know you're having a very busy day today, so thanks for all your insight.
Thank you, Remy. Look forward to talking to you again.